This is Matthew Cratter from Trade University, and today I want to talk about how gold can get to $13,000 per ounce. Just to put this in perspective, right now gold is trading at about 1,769 US dollars per ounce. Now, the reason something like this could happen is because we have this big budget deficit in the U.S. The U.S. government, the federal government, is currently spending about $7 trillion a year. Taxes are only bringing in about $4 trillion. And so we have this approximately $3 trillion budget deficit that's normally made up by U.S. government borrowing, by issuing bonds. But there's another solution for that, and this comes from an actual document I'm going to link to below called the Financial Accounting Manual for Federal Reserve Banks. This is obviously a fairly obscure manual, but it exists nonetheless. And what it says under item 2.10 is that the Secretary of the Treasury, this would be our good friend Janet Yellen, is authorized to issue gold certificates to the Federal Reserve Banks to monetize the gold held by the U.S. Department of the Treasury. At any time, the Treasury may reacquire the gold certificates by demonetizing gold. So the way this would work is this. The U.S. Treasury currently owns about 261.5 million ounces of gold. So under this scenario, we would have the Federal Reserve, which is the central bank in the U.S., write up the price of gold. And then Yellen, as head of the U.S. Treasury, would issue these gold certificates in exchange for cash deposits to the Treasury General Account. Now, the TGA, the Treasury General Account, it's just the U.S. government's checking account. It's where all the spending comes out of it, sort of a checking account that the U.S. government holds at the Fed. So as we said, the U.S. Treasury currently holds about 262 million troy ounces of gold. And what this means is if the Fed were to write up gold, and this is something they can certainly do, if they did that, for every $3,825 that the price of gold goes up, and remember, it's only at about $1,800 now, so this would be a massive increase. But for every increase of this magnitude, the U.S. Treasury's holdings, the value of those gold holdings would go up $1 trillion. So I'm just doing the math, 261 million times 38.25. And so if the Fed wrote up gold, you would be able to basically stick money into the government's checking account. Now, as we said, there's this budget deficit of $3 trillion. So what you'd want to do is do this 3 times. You would write up the price of gold by 38.25 3 times, add that to the current price of gold, and you end up with gold trading above $13,000 per ounce. This would obviously be a massive, massive move higher. Here is a chart of the TGA, the general account, the Treasury General Account. We can see that going into the fourth quarter of 2020, it was packed full of money. It was almost at $1.8 trillion. That's since been spent down. So this is the chart, of course, to watch. Why would the U.S. government want to do this? Well, if you all of a sudden supercharge the U.S. government's checking account, they could then spend these trillions of dollars into the economy. They wouldn't need to borrow. And this government spending, since government spending in the U.S. is already something like 30% of GDP, this would massively increase the GDP, which is just all the goods and services produced by the U.S. economy, and it would shrink the debt to GDP levels in two ways. One, the U.S. would not have to issue as much debt, so the numerator here would go down, and then, of course, GDP would grow, so the denominator would go up. And what this means is that this chart of debt to GDP, which peaked out last year at about 135%, economists have surmised that 130% is the point of no return. There's only been one country that hasn't blown up when it reached debt to GDP levels of that magnitude, and that's Japan, which is a very unique situation. But certainly if you're a global reserve currency, as the U.S. dollar is, it makes it much more difficult to have these sort of leveraged, highly financialized economy. And so what the Fed really needs to do, and what the U.S. government needs to do, is get this debt to GDP ratio much, much lower to try to get it back to where it was in the 70s and 80s, somewhere between 30 and call it 60%. That would be a much more natural level, because if you think about it, debt is the debt of the U.S. are liabilities that need to be serviced by the real economy. You need to pay interest and pay back principal. And so the U.S. economy has to be a certain size. And that's why it has to be a certain size in order to be able to service this debt, in the same way that you need to have a certain net worth or a certain income to service a certain sized mortgage. And when you become too leveraged, whether you're an individual or a government, bad things can happen. So if this were to happen, this would obviously be rainbows and unicorns for everyone. Gold bugs would be very happy. There'd be this huge flood of liquidity into the economy. Stocks would go up massively because of all this increased spending. Now, I'm going to hear people, of course, say in the comments, well, Fort Knox is empty. What if the US Treasury doesn't actually own this much gold? I don't think it matters, simply because it's the government. They can say that they own it, and they can do this sort of accounting trick. That's the other objection, of course. Isn't this just another cheap accounting trick? Well, of course it is, but the US government thrives on cheap accounting tricks. This is another cheap accounting trick, printing up money and monetizing U.S. government debt with it. This is one reason we're seeing so much inflation. We're seeing the price of everything skyrocket because of accounting sleight of hand by the Fed, printing out more dollars. But it does have a real effect on the economy. Now, people will ask, do I own any gold or gold stocks? And I do not. As those of you who have been following this channel for a while know, I sold all of them late last year and moved the money into Bitcoin, which turns out to have been a very good move. Do I think that the Fed is going to write up the price of gold and that the US Treasury is going to monetize its gold? I don't think it's going to happen. I wouldn't say it's a 0% probability. This would be a really crazy thing if it happened. I think it would mean that the government's extremely desperate. So I would attach somewhere between a 1 and 5% probability of this happening. So it's certainly not impossible. It's literally in this financial accounting manual that's issued by the government. But I think it's unlikely. But if this were to happen, if the Fed decided to write up the price of gold, you would see Bitcoin immediately trade into the millions overnight. You would have a huge gap up. And this is why it's so dangerous to ever be short Bitcoin, because you can have all the volatility, the ultimate volatility is to the upside. You can have these 70-80% drawdowns. But over history, Bitcoin has shown that the real volatility is to the upside. And if a major central bank like the Federal Reserve were to do something like this to gold, it would constitute an effective massive devaluation of the US dollar, which would mean that Bitcoin would immediately adjust. And if you look at where Bitcoin is now relative to gold, you look at the stock to flow, it's very easy to see how Bitcoin would immediately go to $1, $2, $5 million per Bitcoin. It's going to get there anyway, but if the Fed were to do something like this, it would get there. It would certainly get there overnight. So this is the thing. Even if gold wins, Bitcoin wins more. Bitcoin is gold 2.0. It's easier to move around the world. It's easier to hide, to verify or assay. It's easier to store. It's also easier to verify the total supply of Bitcoin. No one really knows what the total inventories of gold are in the world. And there's certainly a lot of gold in the solar system, whereas Bitcoin is strictly algorithmically limited to 21 million Bitcoin. And probably 3 to 4 million of those Bitcoin are lost forever. So the actual supply is much, much smaller. So Bitcoin is like gold, but much better in every single way. But if you are a gold bug, I hope this happens. I hope your gold skyrockets. My Bitcoin will go up as well. I think that the more likely scenarios, we see gold basically dead in the water for many years to come. It's been a very bad hedge against central bank money printing and currency devaluation for the past decade. This probably continues unless the central banks decide to re-embrace gold with open arms. They certainly hate gold and have hated gold since 1971. So I think the more likely scenario is gold stays somewhere around 1,700. Bitcoin still goes in the millions. But if something like this were to happen, Bitcoin would certainly get to the millions a lot faster. And I'm sure Peter Schiff would be very happy. That being said, the move up in Bitcoin would be so violent. It'd be much more than the 10x or so that you would expect from gold. It would be probably more like 100x up from here. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.